Hello and welcome to Secrets. On today's video, we will learn about history of Indian banking system. Let us start. In ancient times, an indigenous banking system has prevailed in India. The businessmen called shroffs, seths, sahukars, mahajans, chettis, etc. had been carrying on the business of banking since ancient times. These indigenous bankers included very small money lenders to shroffs with huge businesses who carried on the large and specialized business even greater than the business of banks. The banking system of the country is the base of the economy and economic development of the country. It is the leading part of the financial sector of the country as it is responsible for more than 70% of the funds flowing through the financial sector in the country. The banking system in the country has three primary functions. 1. Operations of payment system. 2. Depositor and protector of people's savings. And 3. Issue loans to individual and companies. The banking system in India can be categorized in two phases. 1. Pre-independence phase 1786 to 1947 and 2. Post-independence phase 1947 to till date. The post-independence period may further be divided into three phases. 1. Pre-nationalism period 1947 to 1969. 2. Post-nationalism period 1969 to 1991. And 3. Liberalisation period 1991 to till date. Let us further learn about the two phases of the banking system in India. 1. Pre-independence phase 1786 to 1947. The origin of the banking system in India can be traced with the foundation of Bank of Calcutta in 1786. The banking in India originates in the last decade of the 18th century with the foundation of the English agency houses in Bombay and Calcutta, now Kolkata. Three presidency banks, Bank of Bengal, Bank of Bombay and Bank of Madras, established in the 19th century under the charter of the British East India Company. In 1935, the presidency banks merged together and formed a new bank named Imperial Bank of India. The Imperial Bank of India subsequently named the State Bank of India. The first Indian-owned bank was established in 1865 in Allahabad named Allahabad Bank. In 1895, the Punjab National Bank was established. The Bank of India founded in 1906 in Mumbai. Many more commercial banks such as Canara Bank, Indian Bank, Central Bank of India, Bank of Baroda and Bank of Mysore were established in 1906 and 1913 under Indian ownership. The Central Bank of India, RBI, established in 1935 on the recommendation of Hilton Young Commission. At that time, the banking system was only covered by the urban population and the need of rural and agricultural sector was totally neglected. 2. Post-independence phase 1947 to till date. At the time of independence, there were more than 1,000 banks in India and the entire banking sector was under private ownership. The rural population of the country had to be dependent on small money lenders for their requirements. To solve these issues and better development of the economy, the Government of India nationalized the Reserve Bank of India in 1949. In 1955, the Imperial Bank of India was nationalized and named the State Bank of India. Government of India came up with the Banking Companies Act 1949. This act was later changed to Banking Regulation Amendment Act 1949. The Banking Regulation Amendment Act of 1965 gave extensive power to the Reserve Bank of India. The Reserve Bank of India was made the central banking authority. Nationalism Period 1969 to 1991. In 1969, Government of India nationalized 14 major banks whose national deposits were more than 50 crores. They are Allahabad Bank, now Indian Bank, Bank of Baroda, Bank of India, Bank of Maharashtra, Central Bank of India, Canara Bank, Dena Bank, now Bank of Baroda, Indian Bank, Indian Overseas Bank, Punjab National Bank, Syndicate Bank, now Canara Bank, UCO Bank, Union Bank of India, United Bank of India, now Punjab National Bank. The Indian banking system immensely developed after nationalism but the rural and weaker section of the society was still not covered under the system. To solve these issues, the Narsimham Committee in 1974 recommended the establishment of regional rural banks (RRB). On 2nd October 1975, RRBs were established with an objective to extend the amount of credit to the rural section of the society. Six more banks further nationalized in the year 1980. With the second wave of nationalism, the target of priority sector lending was raised to 40%. Those banks were Punjab and Sindh Bank, Vijaya Bank, now merged with Bank of Baroda, Oriental Bank of India, now merged with Punjab National Bank, Corporation Bank, now merged with Union Bank of India, Andhra Bank, now merged with the Union Bank of India, and New Bank of India, now merged with Punjab National Bank. Liberalisation Phase 1990 to till date. In order to improve financial stability and profitability of public sector banks, the Government of India set up a committee under the chairmanship of Sri M. Narsimham. The committee recommended several measures to reform banking system in the country. The major thrust of the recommendations was to make banks competitive, strong, and conducive to the stability of the financial system. The committee suggested for no more nationalization of banks. Foreign banks would be allowed to open offices in India either as branches or as subsidiaries. In order to make banks more competitive, the committee suggested the public sector banks and private sector banks should be treated equally by the government and RBI. It was emphasized that banks should be encouraged to abandon the conservative and traditional system of banking and adopt progressive functions such as merchant banking and underwriting, retail banking, etc. Now, foreign banks and Indian banks permitted to set up joint ventures in these and other newer forms of financial services. 10 private players got a license from the RBI to entry in the banking sector. These were Global Trust Bank, ICICI Bank, HDFC Bank, Axis Bank, Bank of Punjab, IndusInd Bank, Centurion Bank, IDBI Bank, Times Bank, and Development Credit Bank. The Government of India accepted all the major recommendations of the committee. Recent development in Indian banking sector. Kotak Mahindra Bank and Yes Bank got a license from RBI to enter in the system in the year 2003 and 2004. In 2014, RBI grants in principle approval to IDFC and Bandhan Financial Services to set up banks. Today, Indian banking industry is one of the most growing and flourishing industries. Banking system of any country needs to be effective and efficient as it plays the active role in the economic development of the country.